Hi everyone, welcome back to Corporate Decoder, the place where we decipher those dense corporate filings that hold the secrets to a company's health. And today we're diving into Vivos Therapeutics' latest report. Maybe they're about to bring some new life to their stock, or maybe it's just another day at the office for this biotech firm. Let's find out. Alright, so Vivos Therapeutics just dropped a Form 8K, which is like a company's immediate bulletin to the public, telling us about important events that have happened. It's not a regular earnings report, but something more specific, and this one talks about their ongoing stock sales. Now, this report touches on something called an at-the-market offering agreement, or ATM for short. Think of it as a way for Vivos to slowly sell shares of their stock to the public whenever they feel it's a good time, usually through a broker. They had this agreement in place since February of last year, but this filing tells us they hadn't actually sold any shares through it yet, as of this report date. So it was like having a car ready to go, but not yet hitting the gas. But that all changed, or could change, very soon. On September 12th, Vivos filed a prospectus supplement. This is basically a legal document that says, hey SEC, we're officially ready to offer and sell more of our stock through that ATM agreement. They're planning to sell up to a certain amount, and they've got an agent, a company called H.C. Wainwright & Co., helping them with this. What does this mean for investors? It means Vivos is telling the world they can now go out and raise money by selling their stock, up to a maximum of about $5.8 million. They've been authorized to do this through an earlier registration statement, which was initially filed way back in February 2025, and then approved by the SEC in September. So they've got the official green light to dip into this pool of potential funding. Now, what exactly are they selling, and what should you know about it? They're selling shares of their common stock. The par value is a very small, almost symbolic number, just a tiny fraction of a cent. What really matters is the market price of the stock when they actually sell it through this ATM program. This ATM offering allows them to continuously offer shares over time, which can be a flexible way to raise capital without a big upfront stock sale. This isn't entirely new ground for Vivos. They already had an ATM agreement in place since February 2025, but for whatever reason, they hadn't utilized it until now. This filing clarifies their intention to move forward with selling shares from that existing agreement, but with an updated prospectus supplement. Let's quickly touch on what's happening with their stock itself. Vivos Therapeutics common stock is traded on the Nasdaq Stock Market LLC under the symbol VOS. This is good to know because it means their stock is on a major exchange, which usually implies a certain level of transparency and liquidity for investors. And here's a point that often comes up with newer companies. Vivos has checked the box indicating they are an emerging growth company. This status gives them certain regulatory perks, like being able to delay adopting new accounting standards. However, they've also elected not to use the extended transition period for complying with new or revised financial accounting standards. This suggests they might be aiming for a more mature financial reporting structure sooner rather than later, which can be a positive sign for transparency. In filings like this, it's common to see legal opinions. Exhibit 5.1 here is an opinion from Alanoff, Grossman and Solel. This opinion is generally about the legality of the shares being offered, essentially confirming that everything is above board from a legal perspective for this stock offering. It also includes their consent for Vivos to use their opinion. So what's the story here? Vivos Therapeutics is gearing up to potentially raise a significant amount of money, around $5.8 million, by slowly selling its stock on the open market. They had the vehicle ready, and now they've officially activated the engine. For investors, this can have a dilutive effect, meaning when more shares are issued, each existing share represents a smaller piece of the company. However, it also means the company is getting cash, which they likely need for operations, research, or expansion. In terms of analysis, Vivos' move to utilize their ATM program signals a need for capital, whether this is for a specific project, to fund ongoing research and development, or simply to bolster their cash reserves. It's a common strategy for biotech companies that often have long development cycles and high expenditure. The key for investors will be understanding how they use this capital. If it's invested wisely in innovative therapies that have a strong chance of success, then this fundraising might be a positive step. If it's just to keep the lights on without a clear path to profitability, then it could be a sign of underlying weakness. This filing itself doesn't give us the deep financial numbers like a quarterly earnings report would. It's primarily an announcement of their intent to sell stock. To truly assess Vivos' financial health, we'd need to look at their balance sheet, income statement, and cash flow statements, which are typically found in their 10Q or 10K filings. But this 8K is a crucial piece of the puzzle, indicating their current strategy for accessing funds. Looking at the broader picture for Vivos Therapeutics, They are in the biotech sector, which is notoriously high risk, high reward. Success hinges on breakthroughs in research and development, clinical trials, and regulatory approvals. A company like Vivos needs continuous funding to navigate these lengthy and expensive processes. The ATM offering is a flexible tool, allowing them to raise funds without the immediate price pressure of a large one-time offering. However, the context of why they need this money is critical. Are they hitting key development milestones? Are their product candidates showing promising results in trials? Without that information, this stock sale is just a financial maneuver. The fact that they've been registered to sell these shares for a while and are now proceeding suggests they've reached a point where they feel the need or the opportunity to tap into this funding. In my opinion, this filing points to a company that is actively managing its finances to support its growth and development pipeline. It's a standard, though, sometimes concerning move for companies in this industry. The key risks are dilution for existing shareholders and the continued uncertainty inherent in biotech development. The opportunity lies in their ability to successfully bring their therapeutic products to market without seeing their actual financial performance and clinical trial data. It's hard to give a definitive stamp of approval, but this filing essentially states they're going to try and get more cash on hand. Alright, that's our quick decode of Vivos Therapeutics 8K filing. What's your take on their decision to move forward with selling stock? Do you think it's a smart move for their future? Let me know your thoughts in the comments below. If you found this breakdown helpful, please give this video a thumbs up and subscribe to Corporate Decoder for more in-depth analysis of the financial world. And hey, don't forget to join our Discord community linked in the description for even more insights and discussions. Thanks for watching, and I'll see you in the next video.